You're about to start earning commissions, and here's the part nobody makes exciting, but every agent needs to understand before that first check hits. As an independent insurance agent, you are not an employee. You're a 1099 independent contractor. That means no taxes are withheld from your commissions. No employer is handling Social Security or Medicare for you. The money you receive is the gross amount, and it's on you to manage what you owe. Agents who don't understand this from the start end up with a painful surprise in April, so let's make sure that doesn't happen to you. When you work as a W-2 employee, your employer withholds income tax, Social Security, and Medicare from every paycheck. They also pay half of your Social Security and Medicare on your behalf. As a 1099 contractor, you're responsible for all of it. That's called self-employment tax. And for 2026, the rate is 15.3% on your net earnings. That covers both Social Security at 12.4% and Medicare at 2.9%. On top of that, you still owe federal income tax based on your tax bracket. And depending on where you live, you may owe state income tax as well. State tax rules vary significantly, so check your specific state's requirements. The bottom line is this: if you earn $10,000 in commissions, you don't keep $10,000. A general rule of thumb is to set aside 25 to 30% of every commission check for taxes. Some agents set aside more depending on their bracket and state. The exact percentage depends on your total income, deductions, and filing status, but 25 to 30% is a safe starting point that keeps most new agents out of trouble. Because no one is withholding taxes for you, the IRS expects you to pay as you earn through quarterly estimated tax payments. These are due 4 times a year. For 2026, the deadlines are April 15th, June 15th, September 15th, and January 15th of 2027. If you skip these and wait until you file your annual return, you'll likely owe penalties and interest on top of what you already owe. You can calculate your quarterly payments using IRS, Form 1040-ES, or a tax professional can help you set this up. Once you've done it 1 quarter, the process becomes routine. Now here's the good news. As a 1099 independent contractor, you get to deduct legitimate business expenses from your income before calculating what you owe. That means the money you spend running your business reduces your taxable income. Common deductions for insurance agents include your E&O insurance premium, mileage when you drive to client appointments, your business phone and a portion of your internet if you work from home, marketing costs, CRM and software subscriptions, office supplies, continuing education and licensing fees, and even a home office. If you have a dedicated space, keep a record of every business expense from day one. A simple spreadsheet works, or you can use an accounting app. The key is documentation. If you can't prove the expense, you can't deduct it. One more thing. Every carrier and FMO that pays you more than $600 in a year will send you a 1099 NEC form showing what they paid you. You'll receive these in January for the prior year's earnings. You'll use these to file your annual tax return, typically on Schedule C as a sole proprietor unless you've set up a different business entity. Speaking of which, some agents choose to form an LLC or an S-Corp as their business grows. That's a conversation to have with a tax professional once you're producing consistently. It's not something you need to worry about on day one, but it's worth knowing it exists as an option down the road. Your action step is straightforward. Open a separate bank account or savings account just for taxes. Every time a commission check hits, move 25 to 30% into that account immediately. Don't touch it. When your first quarterly payment comes due, the money is already there. This one habit prevents more financial stress for new agents than almost anything else you can do.